Hello everyone, David Blair, the Crosshairs Trader here. In this short video, I simply want to describe the there it was or strategy that we Crosshairs traders use to capture reversals of trend. And basically the markets go through trends, they go through consolidations, and then they have either a continuation of that trend or a reversal of the trend. Therefore, with our trading strategy, we take advantage of the continuations of trends and the reversals of trends. And once you have that in place, and once you master that, you've pretty much mastered the ability to trade any market condition. So let's talk about that for a moment. Now, many traders have a mechanical system. They simply have a system that gives them a signal. They trade every single one of those signals without prejudice, and they do well doing that, but it's just a mechanical system. There's no art of the chart. There's nothing else included. Then there are others who simply trade via discretion. Each day they may get up, decide this is what I'm going to trade. If they're day traders, if they're swing traders or trend traders, they do not look for any type of signals in a platform. They simply trade specific setups at their discretion, depending upon when the mood hits them. And they can be very disciplined too. When I say when the mood hits them, that sounds like it's an emotional thing, but they're very strict on their process when they're successful at using the discretion. For me, I like to use both the mechanical and the discretionary part. In the mechanical, we have our signals programmed into the TradeStation platform, and that is available to Crosshairs traders. But we have the mechanical. It's taken me several years to develop these based on my discretionary trading. My discretionary trading, I found what worked for me as far as continuation of trends and reversals of trends, and I programmed those signals in the TradeStation workspace. However, I do not just use the mechanical part. I take the mechanical signal and then I teach a way to use the art of the chart, or the discretionary part, to make trading decisions, to make the decision to enter a specific trade. Therefore, if I have a signal, a mechanical system, a mechanical signal in my TradeStation platform, does not necessarily mean I will take that trade. Therefore, the discretionary part comes in, and the discretionary part has several elements to it. Crosshairs traders will look at weekly chart conditions. We will look at general market conditions, and in the chart itself, we will look at support resistance areas. We will also look at measured moves. We will make sure that there are 3 elements involved in our trading a particular setup, and the settings that we look for, other than the there it was or signal, what the 3 things we look for are this. First of all, we want to see that there is a trend, and not just a trend, but a trend that has been broken. Number 1. Number 2, we want to see a support area established, and then want to see that support area broken. Okay, and that would be number 2. So this would be your support area, let's call it. I like to call it a little TP here. You see that? Okay, so we have a broken trend line. We have a support area established. That's number 2. And then number 3, we want to see a break of that support level and a point in that trend before that break. Okay, so we have a down, a pullback, and then a break of that support area. Let's actually call it, let's do it in this order. Let's take the down, the pullback, then the break. I think that would be easier to understand. Just thought about that. So we have a break at a trend line, uptrend line. Of course, we all look at trends differently, but this is how we view our trends here. There is no right or wrong way. So we have a break of the trend. We establish a support line. We pull back. And that pullback area is number 2. That usually gives us our signal. And then 3, we look for a break of that support line. Then we also want to make sure that after this break that there's plenty of room to run before the next support level. We're going to see several examples here. Now the opposite will work for the upside. We will have a broken downtrend line, a pullback, and then a continued up. But in this video we're going to discuss bearish ones only. So we have our mechanical signal plus our discretion, which is the freedom, main word here, freedom. We all have the freedom to decide what should be done. Here's the second main word, in a particular situation. Therefore, these types of trades only work under certain market conditions. They only work when the weekly chart agrees with them. They work when they have all of these elements involved. So under particular situations, and we have the freedom to choose when to get in them and when to get out. Okay? So let's take a look at some examples here. Let's start with the AEP that we have. Now you can see back here, here are the elements. 1, trend line, broken, pull back, breaks the support level, gives us a signal. Okay? Then we have another, there it was, our signal, but it did not break the support, did not continue to downtrend. So it didn't trade that one. Alright, broken up trend line, support established, pullback, number 2, then breaks the support line. There it was, our signal. Plenty of room to run to the next support level. Now, you can actually put a support level right here. Breakout level. We won't go into how we establish specific support resistance levels, but that gives you an idea. Alright, let's take a look at some others. See if the elements are involved here. Celgene. Celgene, we had a, there it was here, did not break support, did not break the uptrend line. Uptrend line here, broken, no signal. Uptrend line, longer term uptrend line, broken. There it was, our signal, breaks down through the support level and hits the next support level. There's your trade. Alright, let's take a look at another one. CPN. Are the elements involved? Broken up trend, pullback, support line established. There it was, our signal. Breaks down, goes down to a support level. This support level is a measured move. Here to here. Now, it is up to you as an individual trader when you take these trades. You may take these trades and say, I'm going to take a chance that that support level is going to be broken. Some of you may want to wait until it is actually broken. You know, there are good reasons to do either one. We never know what a trade's going to do when we get in it. D, broken up trend line, established support area, a breakdown. There it was, her. ED, let's see if this one has the elements. Yes, breakdown. There we go. How about GGP? Broken up trend line, lower high. Notice these are lower highs to down, new point in a downtrend possibly. Breaks the support level. Boom, that was a quick one. GILD. Broken up trend. So here's you, there it was, or break some support. You can go ahead and get in it there if you want, or you can wait till the trend line is also broken Again, that's your discretion and the freedom to choose as a trader. Breaks these areas down to the next support area. HUN. HUN broke that support down to the next support level real quick. Broken up trends. I believe the best there it was or trades are when you do not have a lot of price action in here that you have to deal with. You know, such as the AEP. If you take a look at AEP here, broke down. There's not a lot of back and forth sideways action here in here with a bunch of support and resistance areas. It's simply a trend that never really pulled back much. KMB. The clearly defined support and resistance areas back here. Not a lot of back and forth like the HUN, but there it was, or didn't break the support, pulled back. Another one, gap back up. Then this one broke the support and the trend line at the same time. LOW, a lot of it has to do with patience too, waiting on your setup. Lows, this is one I actually mentioned in a recent video, live video, daily video that I do. There it was. This one actually, instead of breaking a trend, a little bit different, it did what? It had a consolidation box and broke that box and went right back down to a support area. See how that works? It's almost like magic when it works perfectly, isn't it? But we know that the market doesn't do that always, every single time. There it was, broke support line, pulled back, broke again, hit the next support line. LUK. How about SO? Uptrend line broken. Continues down, gives you a support level, pulls back, breaks. There we go. And one more. This is an ETF. XLU. Broken up trend line, pulls back, downtrend. There it was, and down. Okay. Now let's take a look at a few that, unlike these that had all the elements, did not have all the elements that we were looking for. Didn't have 1, 2, 3. Here's one, a little bit of a broken trend line. You know, here's your there it was or signal, but did it break the support level? No. Did it establish a lower high? No. Okay, how about Coach? Here's a box. I've illustrated a box here. If you follow me, you know I like to watch boxes. Attempt at a new trend here, then it fired, and there it was. Did it break the support level? No. DIS. Another type of support level that you look for is the trend line. Did it break the uptrend line? It did here. Fired to there it was. Or, you know, you could have taken this, but you wouldn't have been in it very long because it's back to the longer term trend line. See? GNW. There it was, upward trend line, didn't break down here, it held above that support, continues to go higher. Worked a little bit here, went right back to support level. See that? How about LNC? I don't see all the elements in LNC. If you really look at this, here's a long-term trend line. Nope. Didn't break it. You know, didn't break a support level. No. Not all the elements are involved on any of these. How about LO? Broke the trend line, downtrend line, but did it break the support level, established support level? No, did not. This is what I like about trading. Not only do you have a mechanical part, but you've got the discretionary part where you make the decision. Did this one ever break the support line? No, it did not. NKE. Did it break the support? No, it did not. RAI. Did it break the support? No. THC. No, did not have that third element. And Yahoo. did not break the support level. We need all three. Remember? We need all three. Let's go back. Take a look one more time. AEP. Uptrend, broken. Pull back. Breaks. Continues down. We want to see all three. You know, you could make this number 2, this one number 3. Doesn't matter. These are the three elements that you need. Our signal plus the freedom to choose and make a decision based on what you see. Now, do they all work when those elements are present? No. Here's TRV. Again, it depends on general market conditions too. This one right now, as of the date of this video, the market's surging now after hitting a support level, and therefore your stocks are going to most likely be doing the same thing. Had a nice breakdown here, bounced right back up. And then the last one. This one had news. Nice breakdown on BBBY. Sometimes news is going to get you. Broke the support level, and then it was upgraded. Some bullish comments were made, and it goes right back up. Nothing you can do about that. But that's what we look at. That's how you trade reversals. It's real simple. You don't need a whole bunch of indicators. You know, just something that says, hey, here's an opportunity that it may be setting up. This is just the beginning. Now use your freedom in a particular situation to make the trade. All right. If you got any questions, please contact me at david@thecrosshairs.trader.com. Thank you.